When it comes to trading, I've learned that you can backtest anything in the world, even after seeing it 100 times. But then there does come a time when psychologically and visually, those two things will not be the same when things are deleted or you can't see what's next. Hey everybody, what is going on? My name is Shaquan and I am a Forex trader. Today I am backtesting New Zealand dollar Swiss. It's just going to be a quick backtesting session. I'm just backtesting a small area, and I'm going to kind of walk you guys through what I am looking at. Going to go through like a little spiel of talking, a little spiel of being silent, but then letting you guys know as I'm backtesting what I'm also looking forward to in the current future of New Zealand dollar Swiss as well. So let's start with the area that I'm going to be backtesting and why I'm actually backtesting it. So I am going to be backtesting New Zealand dollar Swiss from the month of March this year. Well, actually last year, 2022, because what I realized, and I probably need my glasses, right? What I realized was last year I just let a lot of trades get away from me, and I am backtesting an approach to holding my trades longer, because these are trades that I did see last year that I called out last year, but for some reason, for myself personally, I did not take them. Now, I am also a Forex coach, so when you guys hear me say I called these trades, it's like an NFL coach saying I called these plays. The biggest difference between being a coach who's calling something and being the trader or the player is that you got the person who's calling something and you got the person who's taking action on it. So I'm a person who calls things out while my clients can play those things, right? And that's what I found myself doing a lot of last year. But this year, I want to be the coach and more of the player. It's just that sometimes you get a bias. So yeah, but anyway, so let's take a look at what's going on here. So this is from March. This is the third week or the fourth week. I think it's the third week of March. And what I realized was that price had made a new, it had a lower high, lower low, lower high situation. And if we come over here to the monthly time frame, we can see this a lot easier. The goal is to see, before I drop that in time frames, is how I would have traded this. So I'm going to find my target. I'm going to also go back to look at the entry and how price got from going here to down, and that's what I'm going to be back testing. So what I'm going to do is I'm going to clear my chart. Now, we both don't know what's going on next. Even though we've seen the candlesticks that preceded after, when it comes to trading, I've learned that you can backtest anything in the world, even after seeing it 100 times. But then there does come a time when psychologically and visually, those two things will not be the same when things are deleted or you can't see what's next, right? Hindsight. So the hindsight part is taking away. What I want to do is see how I would have reacted to holding to the long-term target and how I would have back tested this. So let's go ahead and let's get started. So what I'm doing here is I'm making a statement to where my overall target is going to be. It's going to be back down to 0.60716. And if I wanted to add a Fibonacci, I can to hold the trade a lot longer. Now, I trade my technique called TMP, and it stands for Trend, Market Structure, Price, Action. So I see the trend, and because I see the trend and I believe I want to trade it down, then it's going to be a downtrend to me, which means I'm going to only be placing sales. And to hold down to the -27, which is something that I want to get better at doing within my technique, means I'm going to hold this trade a lot longer. Now what I'm also doing here is I'm also going to make a simple note that basically says that I may be holding this trade for a few weeks to a few months. The biggest thing about this is you have to know who you are and if you're capable of doing this before you even get into a trade, right? Like you have people who say that they are day traders, which basically means that they're going to be holding trades for like a few days, right? Or under a day. day traders. And then you have your scalpers. They're like, oh, I'm going to hold this trade for seconds to minutes. Scalpers. Position traders say, well, I'm going to hold the trade for months, possibly a year or so. Position traders. Swing trader, you can be a short-term swing trader. You can be a long-term swing trader, which basically means you're okay with holding the trade for 24 hours and more, right? And this is something where we can't say where we're going to get out of the trade at this particular time. It's more so saying, can I hold to that target? And that's what I'm, like I said, I'm back testing right now. And I'm also going to backtest what's going to hinder me, but also I'm going to be able to hold the trades that come up next. So let's get into it. So now we see the reversal, right? So when price came into this area from where I started to say I'm going to back test from this area, I'm dropping down to the daily time frame. What I noticed is that price is retracing, making higher highs and higher lows. This is not something where I'm going to say, oh, price is just going to drop and decrease from here. This is me waiting to get evidence that we're going to reverse to continue back into the trend, continuation to the downside. So I want to make mention of this too. Like, I trade fluctuations, but every fluctuation is not important. My job isn't to say, oh, price is just going to stop here and I can just enter. My job is to first get evidence of that first and then trade. You can say that I trade tops and bottoms, like highs and lows, which I kind of try to do. I like to trade pick my highs and lows. And that may cause for me to maybe go for the trade maybe more than once or more than twice sometimes, right? But the goal is to get in as soon as I see that there has been a change in the market, and this is the change. So you guys can see that we went from 0.647 to 0.6513. That's the higher high. That means price is still increasing here. And because price is increasing, unless I set a pending order here, I'm not going to be the seller, right? But we're manually back testing. Now, here is the last higher low at 0.64029. That is the reversal. Reversals on higher time frames don't happen often unless they're false reversals, which we know as stop hunts. And stop hunts suck because they can happen on any time frame, but they happen less frequently on a higher time frame, right? So my job is to see, okay, well, because we have this reversal, where would I want to get into the trade to trade long term? Now, if you also look at it, the highest point after the higher high here is actually here because this is the highest wick. So now price is going from 0.647 to 0.64 to 0.65, then we get the reversal. So now I need price to stay below 0.651. I'm going to get in the trade under that. And then, if all works out, I'm in the sell. So this is the first position. So now price has made a new lower low, which was here at 0.63433. So we are now confirmed that this is now the new lower high price and this is the previous lower low. So now we have the confirmed trend continuation for the weekly and the monthly, and now we have the current downtrend on the daily time frame. So now if I wanted to enter more trades, I'm about to set that up. Now here comes this part. How do we manage the long-term position, right? This is something that even I'm getting more used to, and I'm learning to set break-even rules. So this first trade is 362 pips. So if we break that down, divided by 2 for the 50% mark, that's 181 pips, I believe. Check my math. All right. So I'm going to move this price range down 181 pips. And what this means is that I cannot move this first position to break even until price has reached my halfway mark. But this also means not only can I not move the trade to break even, but I want to take partials along the way as well. So I'll take my first partial. So typically now I'm going to trade with bigger accounts, $100,000 accounts, $200,000 account, prop firm accounts. I started trading accounts, prop firm accounts last year, and I have to say I passed some, I failed some, and it's been a struggle to get the math right. One thing that I'm learning is I'm getting better with my drawdown rules, right? I'm trading a prop firm that only gives you a 3% daily drawdown limit and a 6% overall or relative drawdown limit. Normally, when I trade with other prop firms, they give a 10% relative drawdown or a 5% daily drawdown, but they have time limits. This prop firm has no minimum trading days, which means I can hold my trades as long as I want. I don't have to worry about the 2 evaluations. I only need 1 evaluation to pass. It's still 10%. But the fact that I don't have a time pressure on me is actually better. It's a single phase prop firm. And if you guys want to know more about that and get a 10% discount on your evaluation or your account, you guys, the link will be down below. You just have to use my code, okay? Already knowing that, I feel better. Now, if I have my $200,000 account, if I were to enter this trade and I'm not going to use the full 1%, what I'm going to do is maybe go in at, let's just say 0.25% or 0.5%. So I'll use my paper trading account on TradingView to figure out the math of what my lot size should be. So that's a big thing there. Like anytime you guys see me on TradingView and you see my paper trading account, what I'm using that for is to calculate my lot size, or I use my my calculator on my phone to figure that out. Mainly because I am not big on risk to reward calculators as far as they go online. I like to do the math myself. Or I just like to use TradingView because I'm already on it. So it's literally a one-stop shop. And sometimes I do trade my Owenda personal account on here as well. And then with my prop firm account, I'll trade it in a different window because I don't use TradingView to trade the prop firm, because the prop firm I'm with used to be linked up to TradingView, but they're no longer linked up to TradingView. So that's not the sweet spot anymore. But, you know, it's either I use TradingView, the paper trading account, or I'm using their web trader or my phone. So that's the biggest thing. But yeah, so this is what, 81 pips. So if I risked 0.25% or 0.5% of my account, I'd be risking $500 to gain 4 times that. So that's over $2,000. Or if I'm risking 0.5%, it's $1,000. And so with this trade, I'll be making 4 times that. So over $4,000, right? On the potential trades like this one. So yeah, let's continue to go down. I got the math in my head, right? And let's see about the next position. So we have a new low. Let's go ahead and get this one in as well too. So at this setup, normally I would trade back down to the low of the new lower low. Now, I don't know if this is where price will stop. So I do want to say this. I don't know if this is where price will stop, if this is where price will pull back. Because sometimes as traders, we have a tendency to say what price will do before it does it. But I can have a speculation or an assumption of what price could do or what the risk reward could look like before I'm in the trade. So if this is a true low and price pulls back from here, the risk reward is a 1-to-1. I take a lot of these setups, but I have to say that when false reversal moves come into play, these setups get me in trouble, and I've been noticing that since 2023 has started. So what I'm working on now is holding the trades to the weekly or the monthly targets. That's going to be my sweet spot for this year, and not being so concerned about 1-to-1s. This way I get to trade less, hold more, do less work. So if I can hold this trade, this will be a 4.37 risk to reward. So we'll see if price is going to trigger me in or not. So let's see what happens next. And if not, I just keep going with the flow. Okay, So you guys can see that yes, price did trigger me into this trade. Not only did it trigger me into the trade on this candlestick, it did make a new low. But then look what price came and did again. It came back, but I'm not stopped out of the position. Okay, so this is what I like to call lingering. Price is lingering around my entry points. Now, this is another reason why I'm wanting to work more so on long-term trades as well, because normally by then I'd have moved this trade to break even and then even this one to break even, which means now I will be out of the trades with no profits at all. I wouldn't have lost money, but I'm just out of the positions. And I've learned the fear of the unknown is causing me to not enter into these trades or move the trades to break even out of fear that I'm going to lose money, right? I have to get over that. I have to conquer that. This is not a trading problem. This is a how I grew up problem. When you grow up with seeing people lose money, or when you grow up to seeing how people not really manage money or only make money to pay bills and not have anything extra, you realize that's not what you want in life, right? And I realized I've been trading through that persona or that fear of not having. And I gotta get over that. And the only way I'm going to is to create rules that say, hey, hold the trade, hold the trade, hold the trade, set the parameters. That's it. Trade the parameters. So now we have another one here, same concept, right? So price again, just made a new low. And you guys can see that I'm looking at the same thing over and over and over and over again. I'm not doing anything different. If you guys notice, I'm staying to the right. I'm not trading to the left. I'm picking where I'm going to enter the trade. I know where I want to exit the trade. The stop loss rules are going to be the same. Like everything is the same. Everything is the same, right? I have the same technique on everything. And these are my bread and butter trades that I need to capitalize on a lot more. So price made a new low here. Now, I don't know if this is where price will stop. I have no clue. I have no idea. But all I know is this is where I want to enter, or I want to see if price will come, pull back from this place. Let's put it that way, pull back and then continue to go back down. So let's see. I'm going to sit where I want to enter my trade at. All right. Now, with this part here, and you guys can see that I'm setting it to where I want to enter the trade because I'm working more on setting pending orders as well. Last year, I started to set more pending orders. So let's get the halfway point for here as well. So this is 355 pips. So what's that? 17. So we'll say about 171. Probably about the same area as in here. We'll just put it to the same area as we have here on this one. Right? This trade is 339. So what's that? 128. Well, actually 118, I think. No, it can't be that. 168. Yeah. All right. So pretty much about the same area too. We got another halfway point. So these areas are about the same, right? Y'all check my mouth. Check my mouth. Okay. But anyway, yeah. So let's continue forward, right? Because it may be right, it may be wrong. I don't know. But this is going to be the halfway point as well too. Okay. So let's see if I'm going to be triggered into this one. Okay, and I'm not. So because I'm not triggered into this trade, this gets taken away, this gets taken away. But what I did notice is that price did make a new lower low. So this is me adjusting. I'm still in profit on these two. But now that price hit my halfway point, I'm going to move this trade down to break even, meaning I'm going to move it to the entry point from where I entered the trade. I'm going to move this trade down to break even. And by this time, I want to take half offs. Like I'm learning to take partials. So let's just say that I was in this trade, and wherever price is right now, I'm going to take off partials, which means whatever lot size that I entered a trade on, let's just say I was able to enter into this lot size of like a standard. We'll just use that because it's easier. So because it's a standard, I'm just going to take off 0.50 or $5 out of that position. So 5 times however many pips I'm up. Let's do it on this one. So let's just say that I'm up 182 pips. So $5 times 182 pips. That's how much is going to be banked into my account. And now the rest of the 182 pips, they're just gonna run for me and, you know, in profit. But I haven't lost money. I'm still in the position. I was just able to bank some profits. I just say out of mind. Okay. Now, if let's say I'm in this trade and whatever I entered on, it's gonna be the same rules as long as it hits my break even point, right? So now I got 2 positions running. Partials have been taken. Let's see what's going to happen next. Let's update this chart as well, because we do have a new low. We do have a new lower high. And I want to enter this, right? And I'm going to continue to run it down to the same take profit. So let's see if we get triggered in. Okay, so I've been triggered into the trade. The position is running in my favor. Let me find the halfway point to this one as well. We're up 245, so that's what 1, 2. So I say about 122 pips. Yep. So it hit the halfway point. So now at this halfway point, let's just say that we'll just move this one. Let's just say that this was the halfway point in here for this position, because it's a new position on the same trade I deal. So what I'll go ahead and do is I'll take partials on this one. So I take the partials. I can move this position to break even as well. As you guys can see, price came back and it also made a new low. Y'all, this is what I call a pretty area. I like to trade pretty areas. Normally I do trade pretty areas. But for some reason, last year, I didn't trade all of this. So when I'm going back looking at it now, it's like, okay, well, why? What happened? What was the problem? What? Because you gave it out. Talk about it. What happened? Right? So there had to have been a disconnect there. And I'm working on that disconnect to make it a connection. Okay? So now let's go back and, you know, let's see if we can get in another trade, because as price is trending, this is what I want to do. Now let's talk about the time really quick. So from the first entry here, April 4th, to where we are now, May 19th, this is like a lot of candlesticks. This is only 6 weeks of trading. 6 weeks. And there it is right there. That's another disconnection. It's a time. Because I teach and I'm in this prop firm, it's like, yo, it's like people want results, right? Like we want results. So you feel like you gotta be in these trades quickly to get these results, to show them off. And I'm a behind the scenes kind of person. Like I don't feel like I need to show results of money, but I do feel like I need to show results that the system works. Like that's always my biggest thing, because everyone's gonna have a different account. Everyone's gonna have different capital. Everyone's gonna have different risk management. So results are never equal as far as monetary terms go, but results can be equal as far as the analysis can go. And not everyone would trade the same pair, not everyone would trade the same area, but if you can trade the like-minded concept and you're only looking for these parameters, and it doesn't have to be mine, it could be your parameters, but you're looking for a like-minded parameter that you keep doing over and over and over again, you can get the results that you're looking for as long as you're working with the market. And this is what I call a pretty flow, and I only want to trade pretty flows. I'm not looking to trade both directions. I'm not looking to trade every single candlestick, because I don't think they're all equal and fair. I'm just looking to trade what it is that I see, and I like to see these. If I were to go back left, and you guys can see we have a few more pretty areas as well, you know, and this is a beautiful flow too. The fact is, it's not going to always look like it, and it's not always going to come as quickly as this, right? Because this is what a trade every other week here. So, you know, already it's only been 3 positions in 6 weeks. So that should tell you something. Like you can't trade this every day or every week. It's giving time for the position to set up and knowing the overall target here. So let's see if we can get another position here. can see that I was triggered in, and look what happens after that. Price kind of goes sideways for a little bit, and it even, I think it takes me out. Yep, it took me out of my break-even point right here, which means that I would have taken profits on this last position here, still have these two running, and with this position, the second part of those partials I don't get to take. I'm out of the trade with no money loss. This position lingered a lot more, kind of like this one. This one just lingered a little bit longer, so that means that in this last position I'm in it a little bit longer. And let's see if price is going to take profits. There we go. So price takes profits. Okay, so all in all, I actually like what this did here. I liked how price flowed here. And you know, if we now go to the higher time frame, we can see how this flowed on the higher time frame. You can see how price pushed up and it just moved really beautifully all the way down. So from March down to June. So this was, oh wow, that's quickly from March to June. So what, that's what, 3 months of trading right there, 3 months of trading there. So that wasn't bad. And within those 3 months to have 1, 2, 3, 4 positions that played out really, really well. So this is what, a 4.4 risk to reward. I think this is around a 4.42. Yeah, most of these are around 4. So probably about 15, 16% here in 3 months. That's really good. Let's say we can do this again, right? So I want to go to see where price is now. I think, yep, I still got some of my analysis on here. So let me go to the weekly time frame and let's see what's shaping up. Now, I didn't use a field, but I can add a field, but I didn't use it, as you guys could see. And price would have moved down a little bit more, but we didn't really need it. So let's talk about what's going on now. If I look at the overall flow of what price is doing, weekly lower high here, weekly lower low. All right, you guys can see that price is under 0.60879 and then 0.55016, right? So, you know, we're trying to see if price will stay under 0.60879 here, which means that the target that I want to see if we can approach is going to be back down to the low here at 0.55016. So let's drop down to see what's going on here. Okay, so price made a, oh man, it's so beautiful, just like what we just practiced. It had a higher low here. So we had a higher low, higher high, then price dropped, lower low, and then we have a potential lower high, lower high. As long as, if price passes 0.57999, we'll just say 0.58. If it passes 58 Swiss franc, then I'm gonna want to see if price can pull back, because we need to pull back, right? And then if it would drop down. So I'm gonna look, let's go back to the weekly. I'm going to look to see if price can come back to my weekly zone here, or my weekly estimation zone. I didn't do a zone, I just did a trend line. And if we can pull back and then go back down for 4.48 risk to rewards. Only if price passes 0.58. That's it. Okay, I need to see that first, and then I need to see the pullback. Price can even pull back as much as my estimation zone here, but as long as it stays below 0.60181. If it doesn't stay below that, then I know to change my bias in my direction, because every trade isn't a win, right? And I'm okay with that. But if it does, I can get in an early entry here. I'm okay with price pulling back more. That's what price does, but I'm having a range that I'm working with. If price passes my zone, because I get asked about this quite often, it doesn't mean I'm the buyer. Price has to pass an exchange rate, a number, a fee. It's the fee. It has to pass that fee, that exchange rate, in order for me to pass, to change what I want to do in this market. Only if price passes 0.58. You see how I'm doing that? Only if. I'm not rushing into this analysis, okay? and then I will become the seller. That's it. Okay. So yeah, literally that simple. And if price keeps, you know, trending as she's moving down, then I'm going to sell with the trend. The only thing that will also make me change my full bias as well is if she passed my weekly price exchange rate at 0.60879. Only because if we go back to the weekly, this is the true lower high, right? Because price can do anything it wants in this one area. But the true buyers come into the market after this price. That's just how I'm looking at this. All right. So yeah, so I just pushed something. I don't know what button I pushed. But I pray you guys enjoyed this back testing session with the analysis session and seeing how I'm still doing the same thing when I'm back testing, and I do the same thing when I am trading. Okay. So this is how I personally like to view my currencies, my indices, if I trade a crypto, if I invest in stocks. This is how I like to look at the charts. It's very simple. I know I have moving averages on there. I can look past my moving averages. It kind of helps balance the white noise, okay? So I don't trade my moving averages. It's there for white noise, okay? But if y'all have any questions, make sure you put them in the YouTube video down below in the comment section. Yeah, and I'll answer them from there. Y'all have a good day. Talk to you in the next video.